You would think with movements in the pound, yesterday dipping below 120 and then bouncing right back up, that the markets are saying a no-deal Brexit is less likely. That's why they're valuing the currency more. Do you agree, Valentin?
Well, it's a very interesting question. I had a lot of discussions really yesterday about what has been driving the pound weak, late last week, at the start of this week, and now the rebound. And there are a couple of explanations, really. And as you've highlighted, one is the prospect for having Prime Minister Johnson for a bit longer in a no-deal Brexit, which is negative for the pound. But there is also that group of clients arguing that also reflects the prospect for Prime Minister Jeremy Corbyn with a Brexit deal, but also somewhat less popular economic policies that may ultimately make any sterling-denominated assets less attractive for foreign investors. So, however you look at it, I mean, it's a lose-lose situation for the pound, and it does seem that no-deal Brexit under Prime Minister Johnson may be only part of the story.
So, a lose-lose situation for the pound is what you've just said. Does that mean that you would not be targeting sterling to have any sort of meaningful bounce back from here? And how would you trade around the currency pair if so?
Well, I think that it's safe to assume that the outlook will likely remain rather subdued. There are certain downside risks on the table. Down the road, I think that depending what the political outcome is going to be, we could indeed experience a cautious rebound, but that will then depend on the ability of the UK economy to deal with a potential no-deal Brexit, or indeed to deal with any somewhat less supportive Labour economic policies. I think also, quite importantly at this stage, I should highlight that the downside for the pound may not be as accentuated as we thought before, for a range of reasons. I mean, just purely from a valuation point of view, we think in cable we're at a level which is consistent with our long-term fair value for the no-deal Brexit outcome, right? Implying that a lot of negatives are already in the price. Markets are also pretty short the currency. And I think what's also important here is that, very different from 2016, is that the pound is weakening at a time where gilt yields have touched all-time low and stocks are rallying. All that amounts to easing financial conditions in the UK, which ultimately should mean that there are now, the market reaction is helping the economy cope, deal with the political risks ahead. That is very different from what we had in 2016, when the pound was selling off and gilt yields were soaring, stocks were coming under pressure. People are talking about a balance of payments crisis or whatever have you. So I think that as a whole, the combination of those factors may actually limit the downside to a degree. Both sides should also mention here the fact that if you want to sell the pound, what exactly do you buy? A few years back, you would have said, okay, the euro, the political drama after the French presidential election was over, the economy was recovering, euro sterling should go higher. You could buy the dollar because the Fed was hiking, but that all has changed. The Eurozone is flirting with a recession, the ECB is about to start easing again, the Fed is already cutting rates, so the context has shifted as well. So overall, where the outlook for the pound may not improve materially anytime soon, I think also the downside risks may not be as significant as we thought before.